Hello and welcome to Building the Premier Accounting Firm. This is Roger Knecht, your host, and here we talk about those things you need in order to run the premier accounting firm in your area, offering quality accounting, bookkeeping, and tax services. Each and every week we have on the show guests, experts that actually help us address various things that you need to be working on as you're running your business. It's things that range from marketing, selling, pricing, client onboarding, mental health, and so much more. And today's going to be a wonderful episode as well. We have a guest on that I'm excited to have on the show, someone I've been looking forward to speaking with. It's Jessica Fialkovich. She is a business exit expert, and she is a small business advocate, someone that I think we can all relate to. Jessica helps hundreds of entrepreneurs buy and sell businesses each year through her business brokerage practice and Exit Factor. She is an innovative consultant helping companies that basically need to have online and offline programs. She offers them help in learning how to prepare a business for sale and increase business value. Jessica is also the co-host of a podcast called The Deal Board. She shares inside stories and small business mergers in the small business world and acquisition world. So, Jessica, welcome to the show.
Thanks, Roger. Thank you for having me. I'm happy to be here.
Yeah, this is going to be a great discussion. So this is actually something that's near and dear to my heart simply because of the fact that I think just using this Stephen Coveyism, we need to begin with the end in mind. So exit strategies is something that I think we really need to talk about more. So I want to stop before we get started and talk a quick moment about what it is that got you into this space. What brought you into this expertise that you're now in?
Yeah. And thanks for asking. I love being on the show too, because I'm with my people. Like I get to talk about like numbers and stuff like that. So, but my story starts when I was 25 years old. I started a small business in the wine and spirits arena with my now husband, and we were young. We had no idea what we were doing. I call it our early life crisis, but we were fortunate enough to build a successful business, but knew we weren't going to sell wine for the rest of our lives. So just 3 years later, we decided to sell that company, not knowing if or how we could do that, but there had to be some sort of way, right? And through that sale process, we were introduced to what's called the Main Street market or small business mergers and acquisitions. We sold through a broker, and we were able to successfully exit that company.
Beautiful.
And that really piqued my interest in this Main Street market and how small and mid-sized businesses are sold across the country every year. So from there, we bought a business brokerage firm, and we started with one small office out of Denver, Colorado, about just over 10 years ago. We just celebrated our 10-year anniversary in that practice. Thank you. So it's called Transworld Business Advisors. We're part of a franchise network, and we now own all of the Transworld offices throughout the state of Colorado. We have offices in Dallas, Fort Worth, Las Vegas, and we just added Waco and Austin in Texas as well. So, 10 years later, 800 transactions later, I really took a step back and I said, so how can I help more? Like, how can I be more of an advocate for small businesses? And really the biggest problem that I saw in our industry was that most of the clients that came to us were either not able to sell or not able to sell for the value that they truly deserved.
Yeah.
And it really wasn't their fault, right? There's just this whole unknown process of how to sell a business. And I was in the same place with my wine business, right? We have a lot of information on how to build a company, how to start a company, build a company, but not a lot to how to sell a company. And so I started Exit Factor as that educational and consulting arm to really give small to mid-sized business owners the tools to be successful in their transactions.
I love it. Beautiful. Because one of the things that I've experienced, and you kind of alluded to it, is so often the business owner is working in the business. They're working very hard, and it's almost like it's unexpected. It's out of the blue. They all of a sudden come to this determination that they need to sell the business. And it's not something that they say 3 years, 5 years, 10 years out. It's like, I need to sell the business this year. Yep. And the business just isn't ready to sell, especially for the multiple that they're asking for or hoping to get after all this hard work in the business. And so what you're doing is you're addressing the very need that they have, which is, well, we've got to get it ready to sell. And it's no different than selling a home, in my opinion. You've got to stage it. You've got to clean up a few things. You've got to take care of a few of the handyman projects around the house. And we've got to get this business ready to do. So how do you prepare a business to sell in less than a year?
Yeah, in less than a year, it really it's I love the analogy of the metaphor of staging a home, right? It is a staging process. So I actually have a client call after our podcast together today, and the business owner is in the 1 year timeline. So we'll use her business as an example. First and foremost, we're going to focus on financial records, which I
Hmm.
know your audience will hear me out on, but really having cleanly financial records, up to date financial records, financials that don't have a lot of extra owner expenses then in them, personal expenses in them for
Yep.
3 to 5 years. So that's really the first thing that we need to tackle is financials. Um, the second big piece we need to tackle, and in less than a year, it's hard to do, but you alluded to, the business being built around the owner, and the owner being like the operator, maybe even the sole operator of the business. In this case, this owner is the sole operator. And there's this misconception out there that, you can't sell a business or a business isn't valuable if it's built all around you. There are definitely, I mean, look, there are thousands of buyers that are actually searching to buy a business that will become their jobs. Now, are you going to get, a premium multiple on that business? No, but you can sell it. But in that case, if you are, a big operator in the business, you sit in a lot of seats, a lot of roles in the business, they do have to have those roles and the processes they handle documented, and easily trainable and transitionable. So that's another big piece we work on in that 1 year time horizon. So financials, transitioning their role. And then the last piece we work on is actually just a lot of education, or also set up for the actual transaction. So we talk about, what type of buyer is going to be the most, I call it the most probable buyer for the business, and how do we position and market the business for them appropriately? What type of deal structure is going to be best for the owner, and how can we pull in different advisors like accountants and financial planners to plan for that transaction and maybe take advantage of some tax efficiencies or things like that there. So in less than a year, financials, documenting the owner's role, and then preparing for the actual transaction.
Well, you've hit on a number of things that we definitely need to address. So I'm going to kind of jump in here, add a little bit of an insight, and then we're going to jump back into it. First of all, the whole idea about the business with the operating procedures, documenting everything, so very true. Obviously, we're in a position where that wealth of information that the business owner has in their mind, the better we can document everything, that makes it more appealing to the other owner, the person that's assessing the business, because they want to come into a turnkey operation. They want to be able to actually take over the operation and know that what's been working and what is going on can continue. And so the better we can document that, we're going to increase the value of the business and reduce a lot of the risk associated with that transaction. Obviously, you started with the accounting. I don't want to skip that. The accounting is so important because we've got to show through the historical accurate information to give weight and hope, optimism to what the future may bring. And so as we start to do forecasts and projections on what the business could see in the next year, 2, 3 years, that's what they're buying. They're buying the future. And so the past is a great indicator of the future. Well, one of the things that you spoke of is we've got to pull out all that commingling of funds that might have had personal things in there. And that's always the thing that as accounting professionals, we need to be stressing. So that's important that you brought it up. But the last thing that you're talking about is that transitionary period that the business owner is going to be going through. Mm-hmm. That is so true, because I think for so many business owners, that's one of the things that they just don't have very clear. So to bring in a financial planner and a tax specialist, all of those individuals help so that when the transaction happens, the business owner gets the biggest benefit that they can. It's not all going away to taxes because of how they're being paid out. They're keeping their taxable income at a certain level where they're able to keep as much as they can over time. You're looking at how it's going to be invested. You're looking obviously as to how much they're going to get paid, what the business will be appraised at. So many of these things. So here's what my question is going to be.
Yeah.
For those listening today, there are three different lenses they can look at this through. Their own business, what they're doing to build their own company with the intent of someday exiting it and getting paid for their own business, what they feel it's worth.
Right.
The other is helping our clients. We're working with our clients and oftentimes step into an advisory role. They may at times ask us the very question, how much is my company worth? And we might refer to EBITDA perhaps and use that as a way of assessing it. but our clients are leaning on us to actually kind of help assess what their company is going to be valued as. And then there's that third element, which is we might be involved in the actual transaction. They may, as the transaction's occurring, lean on us to provide these financial numbers, to do a forecast, to actually discuss as a team of experts in behalf of that business owner things that they need to be aware of as they're going and preparing for this transaction. So lots of different perspectives.
Yeah.
That brings me to my question now. When you're working with someone that is an accounting professional, what advice would you have for us that would actually help us kind of make the company worth its most? Are there accounting insights that you might be able to give us that have been beneficial that can really impact the valuation of a business?
Yeah, it's interesting. So, and I see this with business brokerage practices too, right? And not to be honest, when we started our business brokerage practice, I fell in the same category of the what's the saying? The plumber's house always leaks, right?
Yeah.
So, as advisors, we give all this advice of how to build a sellable business and how to run an efficient business and a profitable business. And then when we take a step back and we look at ours, we limit our own value. And I see that happen a lot in the accounting world. Um, so accounting practices can sell just for a client list, right? And that will be a very low sale amount, low multiple on EBITDA, like we're talking like 1x EBITDA or something like that, or even
Yeah.
less. But I think to make an accounting practice worth the maximum value, and you can get up to, like, I pulled numbers today, and I see the max multiple on accounting practices and bookkeeping services right now is about a 10x multiple. Now that's a max, but that's a pretty big difference between a 1x. But to build a company that's worth that value, it's the same stuff we just talked about with the other businesses, right? So I think sometimes as advisory professionals, we get caught up in doing the work, right? And not running the business. So we have to build a business that's not reliant on us, especially from the client services delivery aspect of it. I think that's the number one thing we have to take a step out of is, bring in other people on our team that are experts and can deliver our client services at close to or at the same level as we do, right?
Yeah. Yep.
I think that's the number one thing we can do in this type of business.
Well, one of the things that I really appreciate you bringing up is the value of the business from an accounting firm point of view is more than just the client list. The client list is an element, but I dare say that there are other things that are more important and valuable. The first being the processes, the systems that the business is actually utilizing to take care of the clients that they have. If you've got a very streamlined firm, you've got processes in place, a technology stack that's very productive so that you actually are very, very efficient in what you're doing as you're providing your bookkeeping, accounting, tax-related services, you're going to be in a position where that is more valuable than the client list that you have, because the certainty of keeping the clients when that next person comes in increases, because the client isn't going to experience the transition as much as they might have because of those policies and procedures, those systems that are in place. The second thing that is also as important, if not more than the client list, is then the employees. Because when you buy the firm, you're hoping that these employees that are so essential to get the work done stick around, that you're able to absorb that culture, take on that culture, maintain that culture. And so as you're evaluating the value of a business, it's probably at least three components. You're assessing the quality list, the quality of the list of clients. Is it a large list? Are they recurring clients? What kind of multiples are we looking at with regards to their payments? There's a lot of assessments there, but it's definitely the standard operating procedures. It's definitely the employees. And those three elements keenly make up then the valuation of what that business is going to be worth in the end. And so as we work on our companies, those are three things that we should be paying attention to. Would you agree with that?
I completely agree. I actually summarize it typically as two components, right? So it's quantity and quality, right? So quantity is the quantity of our number of our clients, quantity of earnings that we have in the business. And that's pretty easy for us to calculate as numbers people easily, right? But the other components you were talking about, Roger, is I throw it into the quality bucket, right? And that's those processes and systems, this technology, the innovation in the business model or the industry, your market share, things like that. Those are all qualitative factors that make you better than the rest in your industry, and that's what moves the multiple, right?
Yeah.
So yeah, bigger companies do sell for higher multiples because just there's more desire. But, once you get into a certain size, like how you move the multiple is more about the quality of the business that you have built, and less so much about the numbers, right? You've got to have the numbers there first as a foundation, but then those quality factors, that's what moves a multiple from a 3 to a 4 or a 4 to a 6.
Yeah, very, very good. Now, this is going to be perhaps more relative to the clients that we're working with, at least as part of this discussion, because you were talking about EBITDA and 1 to 10 times multiples and so forth. Real quickly, there are a variety of ways to determine the valuation of a business or to establish what a company is worth. And I know that there's 4 common ones. Some people will argue as many as 7 ways to come to a valuation. But when you hear that a business that's negative in net profit going for billions of dollars, it's always confusing, like how are these being valued? Can you give us just a few of the better or the more common ways of valuing a business? Everybody wants to throw around EBITDA, obviously, and you can talk about that. But what are some of the common ways to assess for either the buyer or the seller what a company is worth?
Yeah, it's a great question, Roger. And I might ruffle some feathers here, but I'm going to do this for the benefit of all of the professionals that are in transactions. So we'll talk about just small to mid-sized businesses first. So businesses that generate revenue from $0 to $30 million. Let's throw out those billion-dollar transactions because I have no idea how they come up with those valuations. I think it's just whatever Google decides to pay for their competitor that day.
Yeah.
But the gold standard of calculating the value of a business in almost every industry is a multiple of EBITDA. So I know there's tons of other valuation methods, but when you look at how a buyer will calculate the value of a business, how a bank or a lender will calculate how much financing is available for that
Yep.
business, they both only use a multiple of EBITDA. That's like 99.9% of all valuations are calculated on that. So for that reason, like I do see some issues when accounting firms will calculate valuations using different methods versus what it's called the market method, multiple of EBITDA is. And then there's an issue in the transaction where the seller's expectations aren't met. So gold standard is that market method, multiple of EBITDA. Now, there are times when you can't use that method, most commonly when the business isn't making money, right? Especially in small businesses, we see this a lot. So in those cases, if you do have a company that has heavy assets, equipment, inventory, things like that, you can use the asset method as a value calculation. I always equate it to the owners is it's more of like a liquidation valuation than anything. You're not making money there. Or you could look at a multiple of revenue, but the multiple of revenue is much less accurate than that market method of multiple of EBITDA. So the 2 primary ones, market method, multiple of EBITDA, using comps. And I do encourage accounting professionals, if you aren't involved in transactions, this is a way where pulling in a business brokerage or an investment banking partner or referral partner can really strengthen your practice, because you really have to have your ear to the ground and know what's going on in these private transactions in those industries to get the accurate multiple of EBITDA. So that's the primary one. And then the backup asset method's pretty easy for accountants to calculate for their clients if they're in that situation where they do have to sell for a liquidation value.
I love it. Love it. No, this is great. One of the things I'm going to add real quickly here is for the listeners to realize that for accounting firms, bookkeeping firms, one of the things that you can really do, and I should throw tax in there real quickly as well, and you'll see why, is making or building a relationship with brokers is hugely important, because oftentimes these businesses that come to the point of sale are in a position where they're needing the accounting information and oftentimes don't have it. And so to be able to actually go to the business owner and say, as a broker, I have an accounting firm I work with that you can actually kind of get everything in order so that we can actually take to the market finished or finalized financials is hugely important. So to work with a broker as an accounting professional is hugely helpful, because it's that one more networking opportunity that you have to acquire clients, simply because of the fact that they're needing this information oftentimes very quickly, and it needs to be accurate, and they're going to be needing it tax-wise. Obviously, when the transaction occurs, the owner wants to make sure tax-wise that they're being taken care of and keeping as much of it as they can. But the other part of this that I want to introduce is when the transaction occurs, there is a new business owner. And oftentimes what they want to do is if they can see the quality in the accounting work being done, they'll retain that same accounting firm because of the continuity that's going on there. There's enough change going on in the business for them to be able to retain that bookkeeper or that accountant. That's going to be very helpful. So definitely a marketing opportunity here if it's not been plainly obvious. So here's another
totally
question.
Agree. Yeah.
Thank you. The other question that I have is earlier you brought up the idea of the business owner being in a position of having a job in the company. And I think this is hugely important. So I want to talk about it because I feel that business owners have one of three roles when they run their organizations. I strive with my clients to emphasize that they should be building their company so that it is a self-sustaining living entity that is existing apart from the business owner. But when they're working in it as a job and their day-to-day involvement in the work is participating in all that activity, that is a job and it's dependent upon them. We ideally want to get our clients to the point that they're delegating, hiring, and so forth to the point that they're not involved in the day-to-day operations. And now the business, in my opinion, becomes much more valuable because that buyer can see that as the owner is extracted, it doesn't disrupt the day-to-day operations because they weren't working a job in the business. They were actually more experiencing a lifestyle of an owner or maybe operating as an owner. And all of a sudden you're in a situation where as the purchaser, it's much more appealing because you can see that there's not going to be as much disruption in that transaction. Would you add anything to that?
Yeah. So what you just described, Roger, is what we call owner absentee businesses. And
Yep.
it's the term's like a little misleading because they're not absentee owners.
Yeah.
They really have just risen to that true CEO, like visionary strategic level,
Yep.
right? And those businesses typically, depending on the industry, get somewhere between 0.5 to 2 times more on their multiples just for being in that position. Now, I think owners sometimes get overwhelmed by that prospect, especially if they're sitting today and they're sitting in, call it five roles or 5 seats in their company, right? To go from 5 roles to 0 really is very overwhelming. So I do think like it's our job to work with them. It's strategically over time, just getting out of little tasks, right? And so I use this method with my clients that I don't talk about it a lot, but it's pretty simple, right? It's just documenting our time. We take it once a quarter, document everything we do in a week.
Yeah.
And then what I do is I ask them to say, hey, what do you have to keep on your plate? What can you automate and get off your plate? What can you delegate and get off your plate? And delegate does not mean they have to hire a new full-time employee. Like in 2023, there's so many ways we can delegate without hiring another full-time head. And then the last thing is eliminate. Like, what are you doing that is not working anymore, right? And I find if we do that every quarter with our clients, little by little, they get out of tasks and roles and make slow progress towards that owner absentee level. Now, look, like 80% of business owners will not get to the owner absentee level, right? But the closer they get to it, the more they get off the plate, it's still making the business desirable for sale over time.
Yep. Yep. One of the things I've experienced as I've worked with business owners is one, there are those instances where they love so much what they do that they don't want to let go of it. And I completely understand that.
Which is okay, right?
Yeah, that's right. So the second thing I would add, first of all, I love those 3 stages that you explained as they do this quarterly assessment. But I would add to it that what I've done with my clients is I've encouraged them to take a day off that is something that they can schedule, tell everyone they're going to be out of the office. And then when they return, what didn't get done in their absence that was dependent upon them. So when you walk through the front door and they say, hey, this happened yesterday and we need you too. Well, you're clearly learning what are the things that you're holding up in the business because you are involved in that decision and so forth. The second is to then do the exact same thing unannounced. Just call up to the office and say, hey, I'm not going to be able to make it in today. I've got to go to this meeting or whatever. All of a sudden, everyone's there now having to figure out what to do in your absence that they couldn't have prepared for. So that's very telling. The next one is take off a week, whether it's scheduled or unscheduled. The fact is get out of the office for a week and see what gets held up in your absence that upon your return, you have to now step in and finalize, finish, decide, whatever the case. And this helps you identify what are those, like you were describing, what are those processes or steps that need to be delegated. And in that delegation, what authority also needs to follow. You need to give them the permission to make these decisions. And so you're learning all of these things about your company to the point where I was made aware of a business owner that one time took a 3-month sabbatical. Imagine leaving the office for 3 months and coming back and having a business that's run in your absence. That's beautiful. And that's a very good sign of an absent owner.
Yeah, I totally agree. It was funny. I was thinking when my business brokerage offices went completely owner absentee, when I stepped out to start Exit Factor, it was actually when I had my first son. So I had a challenging pregnancy and I knew I had to take an extended maternity leave. So I was actually out for 5 months after I had my son, and I came back and they didn't need me anymore. And it was kind of this magical thing. It's like, yes, now everything runs without me and they don't need me. But why did it take some kind of medical emergency to cause this to happen? It was just it was very interesting.
Yeah, I had a similar thing just these last 6 months. I've got a client that twice has had to go out of the office. Once was for a intestinal surgery that needed to take place that was planned for 3 months. It was something that they needed to get in place before he could have the surgery. So it was well known. The other was a hip surgery. So twice out of the office.
Yeah.
This is what I'm trying to share. In both cases, he returned to the office, and the office ran more smoothly in his absence than when he came back.
Yep.
And so he was very, very much aware of the fact that he was disrupting people. He needed to be willing to delegate a little bit more. And he learned from that. He came to realize that he could trust his employees a lot more than he did. He had better expectations of them now after having had this experience. So this was a very favorable thing, but it was humorous to me that upon returning, everyone was like, "Hey, we did this a little bit better with you gone." So that was quite telling.
Yeah.
So here's the other question that I want to get to. When we work with our clients, we help them go through this process, even ourselves as we sell our business. One of the things that I think is not discussed enough is the fact that after selling a business, there are a lot of business owners, even though when the transaction is very favorable financially, they struggle with depression afterwards, having self-worth, self-identity, because so much of their career has been building this business that they no longer are a part of. Can you speak to that a little bit? Do you have any experience in there?
Yeah, actually some personal experience. So the first company I sold that I mentioned, the wine business, it was called Decanted. I was, and my husband and I both were faced with complete burnout at the point of sale, and had a lot of animosity towards the business. Like, we just wanted out. We were done, period, and wanted to move on. But the day after we sold, started, I'd say, about 6 months of some pretty deep depression for both of us. And it's this really interesting topic that I do talk to our business owners about now. Instead of running from something, instead of running away from your business, running from your business, trying to find something to run towards instead. Because this is my personal experience, but I think as human beings, we really struggle between that line of role and identity. And from my individual experience, like, my identity had become my role as the owner of Decanted. And when that went away and all my day-to-day responsibilities went away, and my relationships didn't go away, but the interaction with those relationships did, it really affected how I perceived my identity, which caused a lot of the depression. So now I encourage people, find something for the after, find something to run to. It doesn't have to be another business. You don't have to run right into another business. But even if it's just retirement, finding a project, a big trip to plan, a road trip, some projects to plan with your kids or grandkids, some charity involvements, just something. It is a bit of a distraction, but it also replaces some of that role for you. So you start to find some identity and some worth through a new role, instead of just focusing on what you've lost.
I love it. Thank you so much for that, because I do know that in our society, many cultures, you have the common question of what do you do for a living?
Yeah.
And it's a common thing to ask right at the beginning of a conversation. And for so long, these individuals have had the opportunity to proudly say they've started, run, operate a successful business. They're the president. And there's a lot to be said about that, a lot of accomplishment there. When you sell the business and you're introducing yourself, you start to lose your identity is the whole point. And so, as you mentioned, you've got to find something that you can be running towards, running to upon selling the business. What are you going to do next? Because all of these people that sell their businesses, I dare say, are very driven, very focused. They're very passionate people, and they're able to put a lot of energy behind something. And when that something disappears and they're aimlessly wondering, what do I do? that's where I hear these stories of people that are, 11 o'clock, 1 o'clock in the morning, or excuse me, in the afternoon. They're still in their pajamas. They're down in the room. They don't leave the house. They don't know what they're doing. Where before they were out of the house early, they were up, they were active, they were involved, they were making big decisions. And so I think not enough is discussed about this because it can easily be addressed. And I say easily in the sense that you can give somebody purpose, but they have to decide it for themselves. But if they just think the funds, the financial gain is going to be the win and be the be all end all of the whole transaction, I think they're going to be up for a sore awakening after about 6 months of golfing or 6 months of reading books or something.
Yeah,
So
I appreciate you bringing up Roger, because I actually think it happens more often than it does not. Right. So
yeah,
I think
yeah,
some people hear this and they'll think, oh, well, that won't happen to me. Like from the majority of the clients that we work with, it does happen. It might not happen the day after, right? Like it did with
yeah.
me. But, yeah, there's only so much golf you can play. There's only so many vacations you can take, right? It will set in at some point for most business owners.
Yeah, and I attribute it mostly to the fact that these people are so passionate and driven. They need something that they can sink their teeth
Yeah.
into. So that's how I attribute it. Yeah,
Yeah.
these are driven people.
Yeah.
All right, here, let me ask a few other questions here that I think are really
Mm.
important. What are some of the strategies that we could discuss that, especially as accounting professionals, we can use to increase the likelihood that a business will sell rather than it's just, this doesn't have much. What can we do to make it enticing so that it actually goes to market and sells for what it's worth?
Yeah. So I think accountants have a huge role to play in this and bookkeepers too. The first is just consistent financials, right? So,
Thank you.
I'm again preaching to the choir here, but like in 2023, it still blows my mind how many business owners we run into. And, I had one this morning and I said, hey, can I get your 2022 profit and loss statements? They're like, oh, we haven't done them yet. I'm like, haven't closed them yet? Or, like, no, we haven't started them yet. So it's pretty much like standard practice now that we expect when we're going to sell a business that the P&Ls are going to be closed every quarter, right? So just consistency in financial delivery is super important. It's the difference between a sellable business and one that cannot sell for
Yep.
any price.
Yep.
The other big thing, and this is something I used to talk about this when we first started our business, I'd say, hey, there's a secret thing called add backs and recasting. If you're putting personal expenses through your business, you can add them back and recast them and still get the value for those dollars. That's really not true anymore. So it's been abused a lot by business owners mainly, but like this tax avoidance, right? Reducing our income in our P&Ls to reduce our tax liability. And then when we want to sell, turning around and trying to add back all those personal or non-essential expenses, it's gotten
Yep.
abused to the point where most buyers and banks won't recognize any of them anymore. So having a conversation with your client as, okay, there's some gray area where you can write off a bunch of stuff through the business to reduce your tax liability, but also understand that might limit your ability to sell in the future, especially if that sale occurs within 3 years from now. And it'll definitely limit the value that you can get for your business.
Yeah, when I talk about that, one of the things that I emphasize, and it's spot on with what you're saying, is so much is said about strategies to minimize the tax liability. But if you know that you're going to sell the business in 3 to 5 years, what you want to do is you actually want to show profit.
Yeah.
And in showing profit, you want to pay taxes. And so that whole strategy of minimizing your profit and paying less taxes isn't to your advantage selling the business 3 to 5 years from now. You actually have to change that mindset and say, you know what? I want to double down and be as profitable as I can be. And unfortunately, as hard as it is and maddening as it is to pay these large sums of taxes, you've got to pay the taxes because 3 to 5 years from now, that's what's going to be used to determine the valuation of your business. And oftentimes, what you've just described has hurt you. So, well said.
Yeah.
Okay, here's the next thing. Top 5 mistakes business owners make as they're selling their business.
Yeah. So the first one is not thinking about it in advance. And you talked about this at the top, Roger, is like people just wake up one day and decide they're going to sell. And that happens for 95% of the clients we work with, right? But I don't think you can really predict when you're going to sell because I
Yeah.
see a lot of sales are based on personal experiences, personal circumstances. But the number one mistake is not running a business like you're going to sell it someday, right?
Yep.
Doing some of those financial mistakes that we talked about, like having this mindset that your business is going to sell at any given time will actually help you run a better business. But also, if one of those personal things, burnout, occurs and you've got to pull the trigger, that's easy to do. So the number one is just not preparing in advance. The second one, and this will speak to your audience too, is just not having the right team around you. So, and when I say the right team, like there's a team of professionals when you go to sell your business. It's typically, a business broker, an accountant, a financial planner, an attorney. And you want to work with people that are experienced in transactions in similar sizes as yours. So people that have worked on small business sales or mid-sized business sales, right? You don't want to hire the attorney that represents the, Fortune 500 clients for your $500,000 bakery, right?
That's
So,
right.
yeah. So the right team in place, and relying on the wrong people is the number two mistake. Number three, we already talked about financials. I can't stress it enough. It's the number one reason businesses don't get sold, is just financial cleanliness.
Mm-hmm.
The fourth we also talked about is the business being reliant on you or not having a transition plan in place. And the last one kind of goes back to mindset, but it's having the wrong expectations or not being flexible in your expectations of the sale. So we talk about all these valuation methods and, most probable buyer and all this stuff. But ultimately, until we get to the marketplace, we don't know who's going to buy the business and what the business is worth. It's that age old saying is the market will determine the value. And I
Yep.
see a lot of business owners that get stuck in their expectations and refusing to be flexible with those expectations and end up not selling at all and closing the business instead of accepting maybe a lower offer or a little bit of seller financing. They'd rather just close the business. And it blows my mind every time it happens, but it happens quite often.
Yeah, I couldn't agree more. It always amazes me when I talk to someone and they actually answer saying, "Oh no, I don't plan on selling the business. I'm just going to work it till I, can't work anymore, and then I'm just going to close it." And I just can't wrap my head around it. But that's a common phrase that I've actually heard. So it's very true. I'm going to go back to your first thing, though. I just want to add something to that. You were talking about always being in the mindset of selling the business and being prepared to sell the business at any time. In the premise of, I think it happens sooner than most people are ready for it to occur. When I talk to business owners, it's not 3 years, 5 years. It's like in the future. They can't even put a number to it as to when the exit's going to be or how it's going to occur. And my point is this. I have a story where my wife commented when we were selling a vehicle, why is it that we always clean the car right before we sell it? Why don't we clean it when we drive it and own it? And I'm like, this is ridiculous. The cleanest the car has ever been is when I'm turning it over to somebody else to sell it. And it's, why don't we just live in that state of cleanliness and order? Why don't we keep the car clean? Why don't we keep it vacuumed? Why don't we keep it washed? And having had that conversation with my wife, I'm a little bit more attentive to keeping the vehicle in a pristine state. And it's, I think, very true to the business. So many of the businesses that I've been involved with in the years that I've now been doing this, the sale doesn't happen because it was planned. More often it's because of a divorce, it's because of a sickness in the family, it's because of a move. There are things that happen that were unexpected that come up within months, maybe a year, that unexpectedly cause the business to have to be sold, and the business isn't ready for it. So to always be running the business with the intent that I'm building a business that can live without me, it's ready to be sold is the whole point.
Yeah. I could not agree more. You're speaking my language, Roger.
I love it. I love it. I love it. Okay, so here's the deal. I'd like to kind of get a wrap up of this. So I'm going to come back to you for a closing thought and really see what we can end this on. But I'm going to do a summary. And before I begin my summary, I do want to invite all of our listeners to go to the episode description. We've got some great information here that Jessica is offering, and you'll find it in the episode description. Basically, what we have there is she has special offers that she rotates that you can take advantage of when you're listening to this podcast. And so in the episode description is going to be the link to actually go there and take advantage of those. In addition, you're going to find some other additional offers in the episode description, such as your ability to get a copy of the book In the Black, 9 Principles to Make Your Business Profitable. This is a must-have book for every accountant to actually work on your business, but as well to take these principles to your client. And in addition to that, Red to Black in 30 days. It's an accountant's how-to guide on how you can actually take your business and turn it from being in the red to being in the black, each of which will increase the valuation of your business and help you as you're working in your company to actually build a business that you can be proud of. Now, with those things being said, as a summary, let me just start by saying I love this conversation. Jessica's so spot on as to when running a business, we need to have the end in mind. What is that exit strategy going to look like? And there's various ways you can sell a business. We didn't get into those, ESOPs, selling them for, as a exit strategy. But the point is we talked about how you can actually impact the valuation of the business and how to value that. And I think those are very important, EBITDA being the most common one. The other thing that she brought up and we talked about a little bit is the role of the accountant in this place is so critical that we have accurate, timely, completed financials that the business owner can rely upon as they go to market. The other thing is then being able to basically be involved in that process and be one of those key individuals that's with the tax specialist, the business attorney. These are individuals that we can be on that panel as an expert. We, the accounting professional, and I invite you to actually speak with brokers and see what you can do to be a part of that process. And likewise, get additional clients as people come to market but don't have their financials in order and they need you to take care of them. So there's so many big wins in this. The other thing I liked about the conversation is that little bit we spoke of the mental health of the seller after the fact. It is wonderful to have that big exit, that big win financially, but at the same time, we need to recognize that we need to at least help our clients realize that their purpose needs to be beyond just those financial wins. And if we can help them kind of forward think and plan, it will help them avoid some of these unfortunate situations that come after the fact. And I appreciate that conversation. Love the 5 things that Jessica mentioned as well that actually are helpful to help the business owner avoid mistakes in selling their business. Those 5 things, I think they're just worth checking off, not only with our own company, but doing that with our clients as well. So lots of good takeaways from today's conversation. Jessica's been very thoughtful and insightful as to what it is she shared today. So Jessica, what's your closing thought though?
I think my closing thought after hearing all that recap is, and I started when we talked at the top of the conversation about, the plumber's house always leaks. And I think the biggest company I've learned from in building a company that's ready to sell is my own, right? And when I realized that I had a company that wasn't valuable and sellable, and I embarked on this process for my own, I decided I was going to set the example. So my closing thought is, let's be the example for our clients. Let's build a company for ourselves that's profitable, that's efficient, that's valuable and sellable. And then that's the example we can use for all of our clients in the future.
Amen. Wonderful. Absolutely love it. Jessica, thank you for being here. Again, for everyone listening, go to the episode description and get that information that you're wanting. Not only the free resources that she provides, but as well in the black and red to black. I also want to invite you to check out in the episode description a variety of other free resources that are available to you as you're working on your business, running the premier accounting firm in your area. I also need to invite you to GrowCon. If you haven't registered for, we want to invite you to GrowCon. It is an event that we do each and every year. We invite the experts, we visit as peers and work on our business. It's an event you do not want to miss. In addition to all this, definitely subscribe if you haven't already to the podcast. In subscribing, you're going to be hopefully notified of all the weekly episodes that get released each and every week. These are episodes where we have on the experts so that you can actually hear what are the things that you need to be working on in your business to, in fact, have the premier accounting firm. I also invite you to listen to the past episodes. Go back and binge those that are most relevant to your current situation and needs, and you're going to get the insights that you're looking for as to what it is you can be doing to work on your business. In addition to all of this, obviously, if you have any questions, we invite you to reach out to us here at Universal Accounting. You can visit us at universalaccounting.com, or you can give us a phone call at 801-265-3777. And always remember this, if it's about accounting, it is universal. Take care, have a great day, and be safe out there, everyone.